Stephen, thanks so much for your time. So it looks like the oil price was really good for the group this time around. Perhaps you can tell us just how good.
Yeah, so a lot of our products are tied to either the price of oil directly or indirectly. So that played well in terms of not only our fuels margins, but also some of our chemical margins. So it played a big factor in terms of the global economy strengthening, oil strengthening, and that played well in terms of our financial results for the period.
And I imagine you have intel trying to figure out what the oil price is going to do for the remaining period. I mean, what are they saying? Yeah,
so what we see is continued volatility in the market. We expect it to bounce between $65 a barrel down to $55 a barrel, and in that trading range, right? And we have told people, don't get overly confident that it's walked up a bit. We do believe that it's going to be volatile, and because of that, we continue to use hedges to protect our balance sheet and make sure if it were to drop very far that we have a floor that we would protect the company in terms of the balance sheet.
But why such increased volatility? And I ask this because, I mean, all global growth projections are very strong and very positive. So, you know, why not go north of 65?
It obviously could, and no one has the perfect crystal ball.
For sure.
The real swing producer right now is the United States and what they call the shale oil producers, and they can come online very quickly. And so you'll see that in the last 3 months we've had increase in the number of producing wells in the U.S., and they're increasing at a very rapid rate at the $65 level. So, you know, that's what happened 2 years ago when their production got so high that it caused a quick drop on the other end. So we're still working our way out of that. Inventory is still a little bit high. I've come down a little bit high, but because of all the factors, you just have to be able to protect your risk in terms of what if it were to drop.
So talking about the U.S., Lake Charles, your statement says 80% complete with that project. So things are on track, things are going well.
Yeah, so this is a huge project. It's a game changer for us. It's the expected final cost is 11.1 billion US. It's a project that takes basically 6 years, and so we're in the final year and a half, if you will. And so even though it's 81%, you know, it'll take another year plus in the field to finish, but we'll start up the first units near the end of this year. So it's a sequential, there's a number of different units that come online. The first ones will come up at the end of this year, then some in the early 19, some mid-19.
I mean, I can imagine the relief at the entire team because, I mean, it's been quite a way to get to this point. But the relief now that Donald Trump is also bringing to the fore by lowering that corporate tax margin. So just give us the breakdown of exactly how much the lower corporate taxes will translate into possibly increased value for shareholders. Okay.
We had not anticipated the change in the tax laws in the U.S., but as you said, the new laws reforms that have been pushed through are positive for us. If you look at the project, as I said, it's an 11 billion US dollar project. The tax impact will increase what we call the net present value of that investment over the number of years that it'll be operating by about 500 million US dollars. So it's quite significant, and so very positive for us. As you've said, it wasn't something we planned on, but something certainly to our advantage.
No, for sure. So let's bring it back to the continent now. Mozambique and Gabon. Now, what's the outlook for those jurisdictions?
So Mozambique is the area in which we do the most activity in terms of our upstream. We produce gas there right now. We've been producing gas since the mid-2000s. And we bring that gas, we beneficiate some in Mozambique, we make electricity, we sell some in Mozambique and bring the rest down to South Africa, which we use to run our plants in Sasolburg and Secunda. We're continuing to develop. We're drilling another area, looking for more gas, and for the first time also oil. And we have gotten some results back. Not as much oil as we had hoped, but still oil there, and we'll be able to go forward with a plan to start producing oil and then take advantage of that as well in the same fashion.
The BEE deal, so it wasn't the best for the group in this period that passed, and I'm talking about Inzalo, but now the new scheme. Are you more hopeful that it will be more rewarding?
Yes. What we've done, the difference between the old scheme and the new scheme, The old scheme was set up that relied very heavily on the share price of Sasol continuing to go up to be able to pay off debts and return monies to participants. That didn't work in terms of providing the value. The new scheme is one that we've used other places, which basically takes a set of assets, and we're taking our South African assets and generating a dividend every year to be able to fund the purchase of the shares for the participants. So that has worked well in other cases that we have been involved in, and we think it's going to work very well in the new KINESA plan. And
talking about your dividend, you have changed your dividend policy this time around. So is that the new normal?
That's the new normal. It's what we call core headline earnings per share. And the idea is to try to take out some of the volatility that you have. Let me give you an example. If you have some big write-offs because you're not going to go forward with a project, or you have a once-off item, even like a funding of a scheme, that's not something that's going to happen every year and every year. So we've tried to go to something that's more consistent, more underlying operations, and be able to use that as a basis. And we'll now use core headline earnings as our basis, and we'll pay a dividend off of that.
For sure. So it's not a material, it doesn't have a material impact to group profits, but it does to lives. Your fatalities there at your mining operations and the accidents there. So what's the plan to bring this down?
Yeah, we're so disappointed about the fact that we've had increased fatalities in our mining operation.
How many? I struggled to see.
We had one in the reporting period, but we had 3 in January-February period, right? Which is, obviously 4 too many. We took a complete shutdown of all of our mining operations in January to refocus everyone in terms of how we operate, what the expectations are. We've got groups working on certain streams to improve the safety in terms of the activities and the leadership and the time that we focus on pre-task assessment of risk, things like that. So we believe we have all the fundamentals, but we need to do better, and we need to really get focused in terms of bringing all of our talents to bear so that we don't have any additional fatalities.
And Stephen, just a quick one. Are you more optimistic about the South African economy under the new dispensation?
Yeah, we're very pleased with the change in the political landscape and the obvious reaching out to want to partner more with business. We make investments in South Africa that last 40, 50 years. So for us, knowing that we have a partner in all corners is beneficial to us.